All right, welcome everyone. Doug here with the LincolnList.com, back again for another weekly edition of Stock Market Mutterings, where every week I take a grope in the murkiness to try to find you the very best trade setups and try to make sense of this market. This is for the week ending on 3/25. Man, this thing was brutal. There was no prisoners. She took no prisoners this weekend, man. It was just selling after selling after selling. I mean, they had to close the market on Friday to get people to stop selling. I mean, it's just absolute destruction. And if you're looking at it, this is something that we haven't seen. Even if you go back to, I'm going to call this a flash crash for a lack of a better word here on February 2nd, this whole test of the 200 moving average, where we've been talking about that and the 50. That's kind of been our theme this whole time, between the 200, between the 50, back under the 50. And here you are sitting at the 200 on Friday afternoon. Now, what you've seen here, to get back to my point, what you've seen here that's a little bit different is the amount of red days in a row. I don't know how long it's been since you have, I don't know, what is this, 9, 12, some absurd amount of days in a row where you started just getting selling and selling and selling. And it's just, I mean, every move, every damn move almost in every single stock this entire week just got stuffed. I mean, everything was a sell. Anything that broke out was there for 30 seconds and retraced. Anything that put together any kind of momentum, retraced. You had a couple of spots here where the market tried to break out on Friday and it retraced. Then late in the day, it tried to give that old timer, let me get that late day buy the dip rally. That didn't help, and it just got smoked right towards the end. So everything was a sell. Everything got sold. Probably every long except for a couple of these, maybe something like Liffin or Home or something like that. Those were just hard to get to work. So that's where we are now. You guys already know that. Hindsight's 2020. Let's talk about what we can do here next week, where we stand. I would have to say that the value right now is going to come from the bounce. There's going to be some sort of a bounce as we progress through the week, maybe Monday, Tuesday, or Wednesday, but I would expect, I can't guarantee anything how it's stock market trading, but I would almost bank on it that you're going to see some sort of retaliation right here on the 50. Now, the 200 moving average. If you're looking at the chart here, let me just kind of highlight it. That's this, let's call it this teal line down here at the bottom. The thing that kind of disappoints me a little bit when I'm looking at the perfect setup is that it's down here now. I kind of wanted that to be, as we were approaching that and selling off late day Friday, I was kind of hoping that would just hold over till Monday. We'd gap down, get into that 200 early on Monday, and then kind of load up and see if we could get a nice little bounce here in the market. But hey, man, that didn't happen. They sold right off into it. So as we sit here, I don't know what to tell you. I mean, I don't know what to say about what we're going to do here. Are we going to sink under this thing on Monday, or are we immediately going to gap up? Now, the approach I would take, regardless of what you're going to be trading here, is that if you gap up, I would be very, very tentative about that first initial gap up. I would not chase anything in that first gap up. I would not rest on my morals in that. I would not get comfortable with that. I mean, if it does happen, I'd be very sketchy about that move. I think it needs to be back tested first, and there needs to be some sort of setups, building, consolidation, or something for this thing to rally. Now, if our first move happens to be a gap down, let's go with a gap down. If we gap up, I would be more concerned about it filling in the gap, then maybe retesting that 200 and then looking at possible long positions there. In fact, I would probably want to short anything that happened to be up quite a bit. If we gap down below that, then I would really aggressively be looking to the long side to try to take advantage of some of my favorite names and some of the stocks that are short-term oversold. Not saying we're going back to all-time highs, not saying I'm a bullish individual. I'm just saying right now the money is on. That's probably going to be the move. You're going to punch out a $300 to $400 point day in the markets here probably during the week. The question is, will we find it? Now let's take a look. Let's just move out of this. You see the market. All that's about this right now is going to be, going forward, to make this simple, is that 200 moving average down there around 258.29 is where it's sitting at right now. That's a very important spot. That's where this thing bounced last time, so keep an eye on it. Now, as we kind of progress through the week, I want to look at a couple of different stocks that I have on my list for bounce plays. One of them is definitely Apple. I mean, it looks kind of like a miniature version of the market. You've got about 9 straight red days here in Apple, and you're really close to its 200 moving average. Hasn't seen that since the last crash. I'm going to call it the flash crash. Last flash crash that we had there in February. So you're coming back into that level. Same thing as the market. You got to be looking down there at 163.30s. You get around 163.30. I would definitely start taking a position. Now, something like this, I may even consider swing trading over a couple of days. If we do get a bounce, it could be something that lasts a day. It could be something that lasts 2 days. But you're starting to see some value creep up in some of these names. Again, we're not saying all-time highs. We're not saying that we believe everything that these companies have to offer, but I just think there's going to be some short-term bounce, and that's where the real premium is going to come in. So look for this one to kind of do something around 163, down around 163, 163.30s for a possible bounce play. Now, if we continue to stay weak, let's say that's going to be the theme, we continue to stay weak. I think one of these stocks I want to look at here that I have been looking at for quite some time is Twilio, however you want to pronounce it, TWLO. This is one of these stocks, kind of like a Sedge or a Light, Grub. These stocks they've been immune to damn near everything. I mean, these things just have continued to grind up in spite of what the market has been going through. These things just been clicking it up. Now, this was the first time this stock has closed below its 10 moving average. If you're looking at the bottom chart right here, this is the first time it's closed below the 10 moving average on a daily chart since its earnings announcement from the very beginning of February. And since that time, it's made probably a 70%. That's my brain math. I don't know if it's accurate, but it's made one hell of a move in stock price here, going from 25 up to just a shade over 41 there. So you finally saw a little bit of crackage in that. If we stay weak, I want to kind of go to some of these names and look for them as shorts. I like this one right here. I think the risk to reward right here where it sits is good. If you went from 39 as a short to 42 as a stop, you could go with that. That's not my strategy, but I think the risk to reward is pretty good on that. If we start to see more weaknesses, more rips getting stuff, more bounces getting stuff, I definitely want to take a look at Twilio, TWLO here for a short. Now, one, I don't really care what the market does. I don't give a damn what the market does. I mentioned this thing last week. I'm surprised I didn't trade it more. It's what the hell with this OLED? Serious, this thing's going to go out of business this week or something? You know, this is starting to just remind me of what we saw years ago with Blue. This is prior to Blue's run now. Crap like MCP. I don't want to kind of put OLED in the category with MCP, my apologies, but I guess when AOI even, where these damn things went up forever and then they just start going down forever. This thing has been in a downtrend the entire year. This thing was peaked out at 200. I brought it up last week. It was at 120 then. Now you're down to 105. I don't know what's going to stop this thing from going under 100. So one of the things that I like to do often is if the market's going to trend downwards, I either like to go to the Twilio type of stocks that have been up a lot for shorting, or you just beat on these ones that have no love. Because, I mean, this thing can't even get a bounce practically this week. And if it did, it lasted for like 20 minutes. I mean, really right now, it's one of the better short plays out there. You have to be a little bit patient with it. And yes, it's going to have spikes. I think it was Monday or Tuesday or something. It spiked up a little bit. And, you know, it hung up there for maybe an hour or so. But eventually it broke down. But this thing is just a mess. And if you look at the daily chart down below, I mean, you're sitting here right at pivotal support, this 104. It's a very big number for this thing. If that goes, I just can't see how it does not end up going up, you know, underneath of 100. So OLED, I kind of like short. And then maybe I want to throw in a little Baidu there for a bounce. This is another one that just kind of runs the theme with the beta names. Apple, I mean, you could put Facebook in this list. You could put Google in this list, whatever. You pick your poison on what you want to trade. But another one that's just basically gone from way up highs to 200 moving average. I mean, you got a lot of stuff. NVIDIA, these things were just poking around all-time highs not too long. Amazon, Apple, Facebook, you know, of course, Facebook has some news centered around it. That's not helping it out. Baidu, you had these stocks that were really up high, that were building great patterns, and they just got smoked. They got smoked this week. And not only did they get smoked, they come all the way down to their 200 moving averages. We haven't seen this kind of behavior since February. So I'm kind of thinking you've heard my thoughts. I think we're going to be playing that bounce or looking to play that bounce. But again, you got to make sure you have a setup, because if you just go into it playing the bounce because it's a hunch or it's a gut feeling, that's the kind of stuff that's going to get you in trouble. That's when they say you're catching a falling knife. If you have a hunch, like, well, it's down 200, it should bounce. Well, no, it doesn't have to bounce. It's just a thought. You're thinking that there's an odds-on chance that it does bounce. But every one of these stocks that I've mentioned, You got to have the right kind of setup here. You got to look for a good intraday setup, a place to manage your risk, because you got to be really, really diligent with risk right now. You can't afford to just buy every dip. You can't afford to let stocks run down too far on you, because you see, I mean, massive amounts of ranges and stuff like NVIDIA. I mean, hell, take a look at this thing. The intraday, you immediately get just butchered from the open. You start out at 240, 270s. You go all the way down to 234. I mean, you damn near $10 straight before you can wipe the crust out of your eyes. Then it bounces $4 or $5, makes a new low, gives that all back plus some, you know, bounces another $5, $6, and then ends up down where the whole thing started from. I mean, this is just insane ranges to both sides. So if you're buying a breakout and it doesn't go, you better get out of it. If you're down here at low a day and they flush and they start snapping back, you better get out of it, because these things have the potential to snap in either direction, $3 or $4. If it's too nauseating for you, then you got to trade something that's either has a little less vibrant as something like NVIDIA, or you just have to sit on the sidelines until some of this stuff irons it out. But that part of the volatility in the market's not going to change. We're not going to end this kind of behavior anytime soon. With the SPY, with the Dow, you'll have sustained runs that may last for a day or two. But going back to what you saw last year or even the year before, those days are over for right now, at least for the foreseeable future. You've got a lot of mess here. And as the market goes down like this, you have less and less market participants. And that's going to make liquidity stuff an issue. That's going to make sustained movement in one direction an issue. So you got to kind of keep all of that in mind. Now, if that's something that's foreign to you and you're struggling, you're sitting there going, damn, man, I need some helps. Visit thelincolnlist.com, take a trial to our live trade room. Just a real quick one. We're looking at Apple for a bounce, Twilio for a short, OLED for a short, Baidu for a long, and who knows? Who knows what we're going to get out of NVIDIA for the week. So if you need help, you know where I'm at. Until next week's Market Mutterings, take care. I'll talk to you then.